A few months ago, I was talking to a friend from Texas. Good guy, mechanical engineer, makes about $105,000 a year. On paper, that sounds like success, right? Nice salary, stable career, the kind of job parents dream about for their kids. But during that conversation, he said something that stuck with me. He laughed and said, "Man, I thought once I made six figures, I'd feel rich." Then he paused for a second and said something even more honest. "Instead, I just feel tired." And I asked him why. And he started listing his monthly expenses: mortgage, insurance, car payments, groceries, childcare, student loans. By the time he finished, we both realized something strange. A guy earning over $100,000 a year was basically running on a financial treadmill. Not poor, not struggling to survive, but definitely not feeling wealthy either. And that conversation perfectly captures a growing reality in 2026, because something strange has happened to the American middle class. The income numbers look higher than ever, but the feeling of financial security, that's disappearing. And today we're going to talk about why the middle class is starting to feel like a financial trap, and why millions of people don't even realize they're inside it yet. Let's talk about the six-figure dream. For decades in America, hitting $100,000 a year was like crossing a finish line. It meant you had made it. You are successful, comfortable, stable. But today, that number doesn't stretch the way it used to. Because here's the part nobody tells you. When someone earns $100,000 in the United States, they don't actually get $100,000. After federal taxes, state taxes, health insurance, retirement deductions, many people take home closer to $65,000 or $70,000. That's roughly $5,500 a month. Now, let me tell you a story about another couple. Sarah and Michael, they live outside Denver. Together, they earn about $140,000 a year, which again sounds pretty comfortable. But their monthly expenses look like this: mortgage, $2,400. Childcare, $1,800. Health insurance, $900. Groceries, $1,100. Cars and insurance, $900. Before vacations, savings, or emergencies, they're already spending most of their income. And this is the quiet reality of the modern middle class. The numbers look good, but the margin is razor thin. But before we go deep, subscribe to the channel.
Now here's the bigger story. The real problem isn't that salaries are low. The problem is that everything else got expensive faster. Let me give you some numbers that are honestly shocking. Over the last few decades, housing prices in the US have risen more than 200%. Healthcare costs have increased over 300%. College tuition, in some cases, 400% higher than in 1990s. But wages? They didn't rise anywhere close to that pace. And when costs grow faster than income for decades, you get exactly what we're seeing today. Middle-class families earning more money than their parents ever did while somehow feeling less financially secure. Let me tell you about someone else, Jason. Jason graduated from college with about $60,000 in student loans. Not unusual in America today. He got a good job in marketing, started making decent money, but then life happened. Car loan, credit card balance, rent increases. Eventually, Jason realized something uncomfortable. Even though his salary had grown, so had his monthly obligations. And here's the dangerous part. When interest rates started rising again, his credit card rate hit 24%, which means if he carried a balance, the bank was basically earning a better return than most investors. And Jason isn't unusual. Millions of Americans are stuck in this quiet cycle where income rises, but debt rises right along with it. But there's another trap hiding inside the middle class, and it's much more subtle. It's called lifestyle inflation. Here's how it works. When people earn more money, they naturally upgrade their lives a little. Better apartment, newer car, streaming subscriptions, food delivery. None of these things feel extravagant individually, but together they slowly raise the baseline cost of living. And suddenly, the life that once felt comfortable becomes expensive to maintain, which means people don't just need income, they need constant income. And that makes financial freedom much harder. Now, let's talk about the future, because this is where the middle class trap becomes really serious. A generation ago, many workers had pensions. Employers guaranteed retirement income. Today,
Most pensions are gone, which means retirement depends on 401ks, IRAs, personal investments. But here's the issue. If most of your income goes toward living expenses, it becomes very hard to invest enough for the future. And this is why millions of Americans reach their 40s or 50s and suddenly realize something terrifying. They've been working hard for decades, but their retirement accounts aren't nearly as large as they expected. What's interesting is that this pressure isn't only happening in America. Middle-class families in Canada and the UK report similar struggles. Housing costs have exploded in cities like Toronto and London. Food prices have surged. Inflation has squeezed household budgets. But the United States has one unique challenge: healthcare. Americans spend far more on healthcare than most developed countries, and that alone can add thousands of dollars to yearly expenses, which puts even more pressure on the middle class. Now, here's the important question. Is the middle class doomed? No, but the rules of the game have changed. People who escape the financial trap today usually do a few things differently. They build multiple income streams. They invest earlier. They avoid unnecessary debt. They keep lifestyle inflation under control. And, most importantly, they treat financial planning as something proactive instead of reactive, because the modern economy rewards people who plan ahead. Let me finish with one last story. There's a couple I know who started investing small amounts in their mid-20s. Nothing crazy, just a few $100s a month into index funds. They drove older cars, skipped expensive lifestyle upgrades, focused on long-term investing. Fast forward 20 years, their investments now generate enough income that work has become optional. Not because they were lucky, not because they earned massive salaries, but because they understood something early. The middle class isn't a guarantee of stability anymore. It's simply a starting point. And what you do from that starting point determines everything. If you want to understand how money, investing, and the global economy are changing the financial future for millions of people, make sure you subscribe to the channel, because the rules of money are changing faster than ever. And the people who understand those rules first are the ones who build the strongest financial future.